Hey viewers, you're watching The Savera and I'm Vidhi Joshi. The US bombing of Iran's nuclear sites has led to a widening of the Israel-Iran war and the further escalation in geopolitical tensions that could lead to a surge in global oil prices, which have already shot up by close to 20% this month. The benchmark Brent crude futures were trading at around $77 a barrel, and the market is reported to be bracing for another spike in prices, with the US having stepped into the Middle East conflict. A wider Middle East conflict is expected to have an impact on oil supplies from Saudi Arabia, Iraq, Kuwait, and the UAE, which would lead to a sharp spike in the prices. Shipping could also get hit, as the Houthi rebels have already warned that they would resume their attacks on ships if the US attacked Iran. India imports around 85% of its crude oil requirement, and a surge in oil prices can lead to an increase in its oil import bill and push up the rate of inflation, which can hurt economic growth. The larger outflow of foreign exchange can also lead to a weakening of the rupee vis-a-vis the US dollar. According to a report by MK Global, Iran produces around 3.3 million barrels per day of crude oil, that is 3% of global, and exports around 1.5 MBPD, with China being the main importer, that is 80%, followed by Turkey. Iran is also on the northern side of the Strait of Hormuz, Persian Gulf, through which 20 MBPD plus of oil trade flows from countries such as Saudi Arabia and the UAE. In the past, Iran has warned of blocking this route. However, with OPEC Plus announcing another higher-than-expected production hike in July, fundamentally oil markets remain well supplied and further Iranian supply cuts can be accommodated, the MK report states. As far as the impact on the Indian economy is concerned, the report states, as of now, we are not changing our forecast and continue to see CPI inflation undershooting RBI's estimate of 3.7% to average much lower 3.3 to 3.4% in financial year 2026. We note that every $10 per barrel increase in oil leads to an annualized gain of 35 BPS in CPI inflation. MK Global said it maintains financial year 2026 CAD GDP at 0.8% at Brent 70 per BBL, with every $10 per BBL leading to upside risk of 0.4 to 0.5%, other things remaining equal. Our energy team maintains a positive view on India's oil market companies on the back of strong marketing margins and core gross refining margins, also hiding up to $75 per BBL Brent for the remaining part of the year, the report added. That's all for now. Stay tuned to The Savera for more updates. Do like, comment and subscribe to the channel.